Kia ora and welcome to the last revision session around Level 2 Financial Information. Today's session is around cash flow statements. My name's Mr. Wilson and it's lovely to have you as part of this. The cash flow statement, firstly the purpose of a cash flow statement shows where our money has gone. So it's a reflective thing. In Level 1 you might have done a cash budget. This one is not forward looking, it's backward looking. So basically we're trying to show what happened to our bank account, this bottom part down here. So we've got an opening bank account on the 1st of February of $3,000. We've got to find out what our closing bank account is by looking at the changes in receipts and the changes in payments. In your 1B5 exercise book you've been working through, I'd like you to hit up on a new page, cash flow statement, and write in the accounts receivable ledger there, the accounts payable ledger, where we'll do our workings, and over here the cash flow statement right through to the bottom. Press pause and I'll see you when you're finished. Great, welcome back. I'm just going to get you to open up the spreadsheet that I sent to you, because in order to do the cash flow statement we need to classify the transactions. So these are the transactions in the spreadsheet that's been sent through to you, and they're self-marking, which will help us as we go through. So the first thing we're going to do is we're going to go through each of these, and we have to classify them either receipt, payment, an increase in accounts receivable, a decrease in accounts receivable, an increase in accounts payable, or decrease in accounts payable, or not cash at all. Second thing we have to do is put the amount of the cash. So I'll do the first 8 or 9 with you, and then I'll get you to finish this one off. So number 1 is we've got the opening balance of accounts receivable. I'd like you to type in there AR plus, because that increases accounts receivable by having that opening balance. And the figure is 20,000. Notice that our two sad faces have turned to happy faces. Number 2 is an accounts payable opening balance. So we write AP plus, and the figure $10,000. Nice and simple so far. The third one is that we have paid for an electrical expense. So will that be RP, AR, or AP or N? Paid, payment, good. And the amount is $2,000. Just check those happy faces. Carry on. Great. Received $3,000 in cash. RP or something else. Good, so we've received, so we write R, and the amount we received $3,000 in cash. And last of the easy ones is we repaid $2,500 in the loan. RP or something else. Pay, good, paid. So $2,500. So then we start some of the tricky ones. So number 6 is the owner drawings is $3,000 cash and $800 inventory. So is this a receipt or a payment? Right, payment. And the figure of money that went out was only $3,000. The next one, invoices issued to customers. Invoice is going to be an accounts something. So that's going to be accounts receivable, and it's going to increase how much they owe. So RP plus, and the amount 28,000. A good lot of credit sales. The next one, depreciation on vehicles. Is that a receipt or a payment? No, it's got nothing to do with accounts receivable or payable either. So we're going to type in there and make that 0. Wages were paid per fortnight, so it's a payment. And over here it tells us assume each month is 4 weeks. So fortnight, that'll be 2 fortnights. So you're going to write 4,000 there. That's 2 weeks into a fortnight. Right, what I'd like you to do is go through and do the rest using these symbols. You've got AP minus, AP plus as well, and get the numbers, and pause the video when you're finished and you'll see my answers will be up for you. Alright, so I've got smiley faces all the way through there. I hope you have as well. Again, you can press pause and check your answers as you go through. A couple of the tricky ones were the word including here. means we've got to take that 2,000 off. The rent, we have to multiply that by 4. Here we've got a paid deposit, so we just need the 20%. And I think the rest you can sort out. Okay, I've just widened my screen so that we can do the workings part. The hard bit's done. Now it's just about putting it into the cash flow statement. So for the accounts receivable, anything on the debit side here is an increase. So we're going to write in all those things that are going to increase. So any AR plus. So we've got the opening balance, and we can abbreviate for these ones. We've got the invoices. And I'd like you to leave, I know we're right, and going through, I think that's all on that side. On the credit side, anything AR minus. So AR minus is go for a credit note. These are the return. For 1,400. Bad debts. Were 800. And before we get to the end, we'll just leave a gap and write closing balance. Closing balance is 16,000. Alright, then we total the highest side. So that's this side, so we'll write 48,000. And transfer that 48,000 across. And this gives us this critical part we're trying to find here. So I'm going to type in bank. Notice that I've put mine in red. It's because it's a key information. And so the bank figure is 48,000 minus all of these. What do I have to do to make the side up to 48,000? So the total money received from accounts receivable is that missing figure here. On the accounts payable side, it's got a credit balance. And that was 10,000. Anything that adds to accounts payable is on the credit side, so any AP pluses. And we've got a few of those, so we've got invoices. So these are invoices that we've received. AP plus 9,000. And then we've got some AP minuses. So they are credit notes. People returning, us returning it back to the supplier. And 900. We've got a discount from our supplier, which will reduce how much we have to pay them. Discount of 400. Type our bank there, our missing figure, and notice again that's in red. And closing balance. Add up your highest side. Sorry, closing balance being 2,000. Highest side's 19,000. And you bring that across, that balance across. And then you calculate what this figure here needs to be. And this is your cash paid to accounts payable. Now, each one of these, the examiner will give you about 3 marks for each. So certainly worthwhile on the marks. Now we move to the cash flow statement. So the first two we put in is the accounts receivable. And that accounts receivable figure you'll just transfer over here. Right, so 29,800 is accounts received from accounts receivable. Note that the names in the cash flow statement are names that you might see in the trial balance. So we don't need cash received from because it's receipts. Down here we'll put the accounts payable one. So type this in as well. And that's your cash received from accounts payable, that figure. Now the easy bit, all we need is R's and P's. So your receipts are anything you wrote R next to. So the next one, and this one is fees. No, we don't write cash fees because it's in the receipts. So it's automatically going to be cash. Any other R's going down? sold old equipment for cash. So we'll just write equipment. And the figure you wrote was 200. So that's all we put in. Any other R's? Owner invested 8,000. So what is it called when the owner invests? It would say capital in the trial balance, so that's what we call it here. 6,000. And get a total receipt. So just add all of those up. Payments are all the P's. So we've got electricity. Again, note that what we're doing is we're writing in what it would appear in the trial balance. Next P, loan. Again, it's not a repayment, it's just loan, as it would appear in the trial balance. And we don't write cash drawings, we just write drawings. Because it's a payment, it has to be cash drawings. Then we've got rent. And the last one here, I'm likely to write equipment, but it's quite good. This is the only time I'll do it different, is to put a deposit so that you know you only put part of it on, rather than paying for the whole equipment. Seems to be a gap. Just check we've got all of them. Electricity, loan, drawings. Missed wages. You would have been screaming at me on that one. And wages is 4,000. A favourite trick of the examiners is they like to leave empty spaces here. And so they like to leave empty spaces to make you put in a foreign item or one of those in items like a bad debts or a depreciation. If you have one foreign item in here, you can't get excellence for this question. So you need to make sure they are only cash, only R's, only P's and nothing else. So no depreciation, no bad debts, only receipts and payments. The surplus of cash, we've got our total money coming in minus our total money going out. And we add that to our beginning bank. Gives us what our ending bank figure is. Hopefully those figures are right. You can check those against yours. And that's the end. This figure here, 6200, that's our bank at the end of February. Great, that's the end of it. Well done on getting through. So you've got another one of these exercises to do and a Kahoot to do, and that's the end of the revision. Thanks for joining me on these, and I hope that next time you have a crack at this exam you'll do way better. Ka kite.